So what I want to do today is just say the areas that we need to cover, okay? And to see how many more classes we need to do to complete that. Right, so I have got you guys to read through chapters 17, 18 and 19. Did you manage to do that? But did you manage to go through the ethics and the corporate governance? Right, okay. What about you, Kanika? What did you do? You finished 17? So is it something easy for you to understand, or is it a bit complicated? Right, okay. But I mean, if there are words, there's an issue, what you can do is just Google them and find out what the meaning is. But its concept itself is quite easy, correct? So I will send you, because I think today I will send you another lot of, today for sure I'm going to send you another lot of questions, right? And I think Introduction to English Law and Alternative Legal Systems. This first section is something that we need to revise. The chapter 1 and 3. Okay. Tort of negligence we did, I remember. Yeah. Am I correct? Yeah. Right. So what we're going to do is today we are going to finish off the governance side of it. And what I will do is touch on 1 and 3 and see what areas we need to cover. Okay, so I think what we will do is today's class and another class, okay, to kind of finish it off. But then what I want to find out from you would be, go through each of the areas, and I want you to tell me the components that you feel difficult, to understand. Yeah, so I will give you kind of from now to our next class, what you can do is then go through each of these areas, okay, very quickly, and say what components that you need me to explain a little bit more. Yeah, and in the meantime I will give you the questions for these, right? Today I will give you most of the questions for this, and I'm gonna send you some mixed bag of questions. It's like your mock exam, right? You need to time it and do it, right? I think all of you guys are old enough to kind of time and do it, because each question is 1.5 minutes. That's the kind of timing that you will get, and I think it's 2 hours, if I'm not mistaken, the exam. And you could see how you score, right? So one of the other things I can give you is, once you go through the areas, I will give you a couple of mock exams. Now what you need to come back to me and tell me is how we need to have a gap from this class. We'll have another class and then a gap for you to go through all these. Come back to me. Yeah. Any other way that you want to tackle this? Take on chunks, right? So take chunks, which is good, finish off this, each area, just you say part A, B, C, D, so finish off chunks by chunks, and that's easier way to cope with it. Correct. But somehow what I want to do is cover everything once again. That's the last session that I'm going to go through with you, but I want you to, like, you can't cover one chapter and come to me. You need to cover a sizable amount, right? Say, let's say 1, 2, 3, 4. We have 8 sections, right? So at least if we do, let's say 3 sections, yeah, A, B, C, then D, E, F, and keep these. I mean, these 2 are easy ones. So actually you're looking at two other classes, then you need to kind of focus and go through it. So next class is, I have to come back. I don't have it with me in front. Kanika, have you got it? Right. So let us see. When generally we have a Sunday and a, is it a Wednesday that we have the class? There's another weekday that we have a class, right? Yeah. So if you think now the next Wednesday is too soon for you, right? I don't mind skipping that Wednesday, and then we do the next Sunday, right? So today's class to next Sunday, I need you to go through this section, A, B, and C. And I will give you more questions on A, B, and C. These things. I'll check if there's any more questions, and I will give you those. Because even through the questions, then you can see how you are. All what we are looking at this point is to see, is there anything that you don't understand? Yeah, you refer the book, right? So I'm targeting that you should do your exams. You should book for your exam first week of June. Right, so don't wait any longer, because you should finish this off. It is through MySima. You have to go through and register for the exam. But if you have any problem, what I can do is, if you're a bit concerned, you can I can put you in touch with Nasima or Lynn, who is with the SEMA office. They will guide you, right? Because I don't know, I can't, because it's in the SEMA thing. I think it's about £50 if I'm not mistaken, or less. I can't remember, really can't remember. So and are you going to be doing any other subjects? Because do you have to do any other foundation subjects, Sahil? Okay. What about you, Kanika? You have got exemptions, right? You have only this. Right. So I think Sahil, I think you have to do your other papers as well, if I'm not mistaken. The reason why I'm asked you is because I have other classes starting as well. Okay. Maybe you can join those classes in parallel. Okay. Because I know there's a class starting on the 18th. I think you have to do CO1, CO2, those papers. That is accounting. Financial accounting and management accounting. So just look at, I will let you know the other classes when they're starting, so it's easy for you to join them. Okay, right, let us go into governance, the 19th. Yeah, I beg your pardon? No. See, here you go, format of the computer-based assessment. Right. Where can I take it? Accredited center. Correct. Okay. So let me go to the governance, the last one. Right. What does corporate governance mean to you? What is that term? What does it explain really? Kanika? Yeah. What does corporate governance mean? What's the meaning of it? Sorry? Yeah, 1 second. I should share my screen with you. That would be better. Okay. So what we're saying is it's the way the company is controlled, and this is the way there are policies, procedures, and this is the way how the company is run. Okay, there are policies related to this, there are rules. Okay, corporate governance becomes extremely important in today's world because there's a lot of issues that's happening, and as a result we are told to have very strict governance. I told you guys to go into Google this case about Enron. Did you check it? Right. So one of the things, that shows where the corporate governance had not really worked. Okay, I mean, there were so many things there, not only corporate governance but ethics and everything, okay, related to it. Now, Cadbury Committee is a committee that they formed. This was formed in like 1980s, right? And it was this corporate governance topic was, even that time, was very hot topic, and now still it is. It's not died down. It's more so. The emphasis is a lot more in corporate governance, right? So Cadbury Committee defined what corporate governance is because of all these issues that were happening in the world. And that's what they say is a system by which organizations are directed and controlled. Okay? And despite the strict control over companies that you've already studied, a number of high-profile corporate failures have occurred. So, so many things happen because of unethical behavior of the directors, and predominantly this is resulted due to, the root cause being the greed and increase in remuneration, power. These are the things that they're looking for. Okay? Is that clear for you? Okay. Causes of poor corporate governance is obviously, where you don't perform your agency duties properly. So the shareholders' interests are not taken into account, and you do as you please. This is the directors, and there is no control over this senior management or the directors, right? That is the main cause. Now, what is an agency problem, Kanika? So if you just read it and say what it is in your own words. So agency problem, who is an agent here? What about you, Sahil? Who is an agent here? Okay, so then what is the agency problem? Yeah. It's the directors who are the agents. Yes. So the issue is the directors do things as they wish, and they don't take shareholders' interest into consideration at all. They only take their interest. So that causes this problem, right? Because directors are defined as the agents of the shareholders. Okay, so if they don't perform the duties on behalf of the agents of their shareholders, who are the principals, there is a big problem. Okay, now and you can see the stakeholders, the agents, and the principal, right? This is how the whole thing works. Now, who are stakeholders really? Who are stakeholders? And Kanika, who are stakeholders? Yes, they are one of the many stakeholders. So stakeholders are anybody who is interested in the company, right? Who has an interest in the company. So they are stakeholders. So your shareholders are also definitely part of your stakeholders. Okay, is that clear? Now, who are stakeholders of you? For you will have some stakeholders as well, right? You as a person, who do you think is interested in you? Yeah, as an individual, who do you think? Family? Yeah. Employers? Sorry, I didn't hear you. Yeah, so relatives. Yeah, so you can see anybody. So these people are very interested in what you're doing, right? And because they have an interest in you. Similarly, this company will also have stakeholders. Now, you will have suppliers, government. Why government is interested in you? Because of the taxation. Community is interested in you because of the kind of work that you're doing, and they provide employment as well, right? Direct and indirect employment. Customers are interested in you. Employees are interested in this company. So you can see there are a lot of people who are interested in you as a company. Okay. So they're saying assessment point. The assessment could easily test your understanding of stakeholders by requiring you to identify which financial and which are interest, right? So you get the financial stakeholders and you get interest stakeholders. Okay, financial ones. So what do you think the difference is, financial and interest? Sahil? Correct. Yeah. 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 Say, for example, financial, if you see customers because they have ordered goods, and if you close down, that will impact suppliers. If you close down, well, you owe them money, right? Customers, sorry, employees, if you close up, then they have to find other employment. Shareholders will lose if you don't perform well. Government will not get taxes if you don't perform well. See, all these guys have a financial interest in this company. Okay, what does shareholder activism mean? So Sahil, can you just read this and explain to us in your own word what is shareholder activism? Yeah. Mm-hmm. 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 Correct. Yeah. Yeah, yeah. So it's like, for example, if a bank has invested in you, and if another company which manages shares for others, they have invested in you, right? They are quite interested to find out your performance. Okay, so they get pretty active because their business relies on your performance. Yeah, anyway, most all shareholders, they want to maximize their wealth, right? If we put $5,000, we want to maximize our wealth. However, when these companies or people who've got larger shareholding, their exposure is great. Okay, so they want to get. See, you can't say the last say as such, because if the shareholders find that the directors are not behaving properly, or it's not in not behaving in accordance to what they're supposed to do, and then they can remove the directors. Okay, you remember, we can remove directors. Okay, so we are looking at, I mean, there is a certain governance process. The directors must behave accordingly. So if they find no, they're not doing it, they will leave, I mean, take them out, right? So which of the following is not a financial stakeholder? What do you think? Sorry? Correct. Yeah. It's a competitor. Yeah, because no, the government is definitely, because they get money, correct? They get direct funds. Mm-hmm. Right. The need for greater corporate governance. Why do we need so much corporate governance? Because it's an expensive act as well, right? I mean, these are not cheap things, because there's a lot of involvement from various parties for this corporate governance process, right? Why has it increased? It's because of increasing internationalization and globalization. issues concerning financial reporting, right? Increased number of high profile corporate scandals. Right? This has led to great a need for corporate governance. So, I mean, we can see if you look at the 1980s to now, nowadays there's so much activities going on because of the technology has become the enabler, and you can do business across the world, right? E-commerce, and there's a lot of globalization. You come together. So company in the UK is very much, they can be anywhere in the world, virtually or physically. They can have branches quite easily, have those partnerships going on because of involvement of IT and the enablement of it. However, all this creates complications for financial reporting and etc. So therefore the governance has to be pretty tight. Okay, any questions there? Right, now this is what they go on to say about the corporate governance development in USA, South Africa, UK and Europe. Right, right. Yeah. Yeah, but I'm also looking at the areas that the examiner is interested in. Even though what is there, they will not ask you each and everything in there. Yeah, there are certain key areas that they will be looking at. I will try to give as much questions as possible, so that will give you a kind of a good length and breadth of questionnaires, and then you would have gone through them, and then you would I think have a good understanding. Right? See, this is what about the US, what really happened. Increasing in shareholder activism from institutional investors and particularly fund managers, right? So when there's a lot of activity, right, from shareholders, they started pressurizing the management, right, of the company. That also creates a lot of problems, right? And that's what happened here. This was driven part by the increasingly protective practices of directors in preventing takeovers, which some investors thought went against their best interests. So the corporate governance, they pushed, USA pushed for it a lot because of Enron, Arthur Andersen and WorldCom issues that happened, as well as active management, right? These were kind of the things that drove it. Close relationship between auditors and clients. So it's we call it the SOX, right? And that is it's kind of a governance framework that's there, and the US follow that governance framework, and they say like certain expenses, for example, should be recorded in this way, right? So many let's say it's not like your normal ERP. Normal ERP is there, but on top of it they will say, okay, I want this about, let's say, look at the remuneration. I want all this information related to the directors. I want all this, if somebody makes over X amount of dollars, I want all the information related to that. So there's a lot of about entertainment, about each of those things, key areas. They'll be looking and saying this is a kind of information that we want, right? Now, it's not, for example, it's not like an IFRS, but it's a compliance thing. And companies in US, they have to they follow the SOX, right? Like for example, Shell, they follow the SOX, and if you're there, it's kind of a rule that you need to do that. Okay. I don't know, actually, not really. Right. So I think we mentioned this the last class, where close relationship between auditors and clients also is a very bad thing, and that's the thing that kind of led to this Enron scandal. Okay. In South Africa, like other nations, South Africa has been seen its share of corporate governance failures. So what they're doing is, in this book, they're showcasing different countries and saying, okay, this is what they did. Now we looked at US. Now they're looking at South Africa and saying, what do they have? They had something called the King's Committee and the King's Report, and that stated the issues and what drove, what are the things that was not working very well and what needed to be done, right? In common with the UK, South Africa has adopted a self-regulation of corporate governance approach in a comply or complaint format of compliance with the King's Report, right? So again, it's a self-governance, self-regulated one. Okay. Now UK, what did we do? The significant government committees like Cadbury, Greenbury, Hampel were commissioned during the 1990s, right? In response to the increased need for good corporate governance. So these kind of committees were set up in order to come up with the corporate governance rule, the code, right? Then Turnbull, Higgs and Smith is another kind of corporate governance. They contributed to it as well. Okay, so now it shows how did this UK corporate governance, what happened. So the Cadbury Committee was 1992, Greenbury Committee was 1995. It dealt with directors' remuneration, and Hampel dealt with best practices, right? Then all of them fed into this combined code. Turnbull Committee in 1999 into internal controls and risk management, right? So these guys looked at non-executive directors as well as audit committees. Now, this is again a very, very important part in CIMA, right? Because they provide that unbiased opinion, and hence, when it comes to public companies that are listed, it's very important to showcase how many NEDs are there, that is non-executive directors, as well as what is their experience, what roles they perform. Okay, is that clear? Yeah. Correct. Now, see what's happening in my case study classes into like strategic case study and management case study. They give details of the directors and the non-executive directors, right? And then there's kind of questions are asked on those at the day of the exam. It is very common to ask the question of the kind of non-executive directors that are there. Are they is it a good composition or not? What do we recommend? Okay, so the foundation is here, as you can see, right? So from 1995 they talk about directors' remuneration. Yeah. So in my strategic case study, there is a scenario where they say that the directors are given a golden halo and a golden parachute. That means a golden halo is at the time they come into the organization, they are given a lot of money as kind of appreciation for joining the company, and also it's a way of saying, well, that the company wants them to work with the company in the long term basis. Even when they leave, they are given a golden parachute. That means a big sum of money, like a bonus. Now, that in itself is not right, okay, because it doesn't give any logic as to how they calculate it and things like that. And in this case, more than half of the people, or all of the non-executive directors, are ex-employees of the company. So really their views are not unbiased. They're quite biased, and also because they're dealing with friends, and friends who've been there for a long time, right? So does that make sense to you, how this whole thing gets linked to the real life? But so when somebody is, let's say for example, this particular company, the directors are coming, new directors are coming in, yeah, and when somebody is not new director, a director is leaving, let's say, when a director is leaving, the director is given a big sum of money, and that's known as a golden parachute, okay? So basically, on what basis are you giving this golden parachute? It should be clearly stated. It should not be, well, he's my friend, so I'm gonna give him a big bonus, right? That means I'm being biased, right? I should have an unbiased view if I'm a director, a non-executive director. No, the Greenberry Committee gives the framework as to how to go about directors' remuneration. See, your company may have a different, your company, you're paying the directors a certain amount, my company pays a certain amount. So all this does not go to Greenberry Committee. They don't care, right? They don't care what you pay. All what they're saying is directors' remuneration should constitute these things. You should display, you should be transparent, okay? These are the type of things that you could be paying ideally, okay? So they spell out what can be done in the organization, right? And how you yes, so they are showing this is the kind of transparency I'm expecting, reporting I'm expecting, that you should give the shareholders. The non-executive directors actually provide that unbiased view and guidance. Okay. Kanika, what about you? Did you understand? So, Sahil, what if you understood? Can you explain? Very good answer. Did you understand that, Sahil? Kanika, yeah? Yeah? Sure, it's good. Very good answer, and that's exactly what's happened, okay? So then there's, in Cadbury Committee, what was the recommendation? Boards of listed companies should include independent non-executive directors. Remember, let's go back to Cadbury. What's he saying? Best practices, right? A nomination committee consisting of independent non-executive directors should vet new appointments to the board. Service contracts of executive directors should be limited to 3 years unless approved by shareholders. A remuneration committee consisting of mostly non-executive directors should approve executive directors' remuneration. Audit committee consisting of mostly non-executive directors should monitor the finance of the company. Correct. Yes. Right? Now, let me show you something else which will kind of cement what I'm talking about. Let me stop this for a second. One second, I just want to show you my case studies so that you can see what this thing is, how this whole thing is linked, right? Otherwise you will feel that what am I learning this for? What is the logic behind it? Second, when you want it, it's always missing in action. One second. Well, let me find it. Okay, found one. Right, let me share this with you. Now what we're gonna do is look at the final stage of CIMA, right? Now you can see you're doing the first stage of CIMA and how the foundation links to the final stage, right? So you see they give you very nicely company background, blah blah. See, they are talking about, you can see board of directors, right? So they give you what is the board, how does the board consist of, okay? Then they'll tell you the non-executive chairman, right? Peters, he's a master's in business. He was a senior manager in the theme park in Florida and became the director of it in 2010. Peter retired in 2014 and Dream Park board was delighted to welcome such talented person to serve as a non-executive chairman. Now he's been in the Dream Park before, okay? This guy has been in the Dream Park board from 2012, okay? So he worked in the theme park industry in Florida for 15 years before joining Dream Park, right? So you can see there are quite a few people. They have a big number of non-executive directors, 8 or so. However, all of them have been in this, most of them have been in the Dream Park before, okay? Which is not a very good thing, because that means they are biased, okay? Now, another thing, directors' remuneration. Look at this. Directors also receive an executive share option. They have a golden halo package at the date of employment, and golden parachute payment termination of employment for any reason other than serious misconduct. So, on what basis are you giving this? Is a question mark, right? Here again we could have a biased opinion from our non-executive directors, because they have been there before and they must be friends, okay? Does that make sense to you guys now? Sorry? Yeah. So if they can be friends of the, say, imagine three of us work in a company, right? We have been working in the company for a long time, and we're friends because we've been there for some time. Now I become a non-executive director once I retire. You guys are still there, right? Now if, let's say, Sahil is leaving, he's my friend, so I agree with all the others and say, yeah, he should be given a very good package, a leaving package. But it's not linked to how the company performed, right? So that's not there. So if actually he contributed significantly to the company's performance, certainly, I mean, it's like a bonus you give him, right? But without any justification, giving a kind of a bonus is not correct corporate governance. That's what they're trying to say in this one, okay? And role of chairman and CEO should not be performed by one person to ensure the board is separated from the day-to-day running of the company, right? So that's also a thing that you need to remember, okay? And then they talk about committee report, right? Recommendation of the Greenberry, the interest of the shareholders should be considered by the remuneration committee. Share options of the directors should be disallowed, and annual bonuses should not be pensionable, okay? So these guys should not be given share options, right? Shareholder approval should be sought if long-term incentives are given to directors. Now that golden parachute thing, right? If they should get the directors, the shareholders approval for that, okay? Notice period of executive directors should not exceed 1 year, right? Now what is the Hamble committee? What did they say? All directors, both executive and non-executive directors, should owe the same duties and should receive suitable information and instructions on their duties. Executive directors must be suitably experienced to understand the nature of interest of their company, right? So the executive directors should have good experience. The board should consist of at least 1/3 non-executive directors. So they give the number as well, 1/3. The role of chairman, CEO should not be performed by one person. Again, they are emphasizing on this. Nomination committee should be involved in recommending new board appointments, and directors should be re-elected at least every 3 years. Now this was there even in the Cadbury one, right? Remuneration should be based upon recommendation of remuneration committee consisting of entirely of non-executive directors. right? And so in our case, is this, like in my case study, does this apply? Even if it applies, is there bias because these guys have been in the company for like 10-20 years before that? Okay, is that clear? Can. Why? Because you can say this, if this person has, if there are specific ways, if you're giving a bonus to someone, you should say what is the justification, right? If there's clear justification, this is the reason I'm giving the bonus, these are, they have met all the KPIs, there's no bias or unbiasedness. I have got clear KPIs, they have achieved it, and I'm going to give it, right? It's very clear. If KPIs are not mentioned, it becomes, well, on what basis did you give? Just because I like the person, because I like the person's face, this is the reason. So that is not good enough anymore. Okay? Is that clear? Okay, so they talk about the European Commission as well. So now you know what this whole corporate governance is, right? And you saw in my strategic case study, they have a lot of information on this, right? And there are a lot of issues around it. So dominance by a single individual, this is also a big issue, right? Where you can have one person, a chairman, who is a very dominant personality. Okay, like for example, if you have, like in let's say this particular company, the chairman is a prominent political party as well, right? Then is affiliated to a political party, and a lot of influence he or she has, and then this person is a very dominant person, right? This is also not good. Lack of involvement of the boards that meet irregularly or fail to consider systematically the organization's activities are clearly weak, right? And sometimes it's because of lack of information as well, lack of adequate control function. You don't have good controls, that's also a serious issue, and a lack of supervision, right? And there are so many other things that's given here as well. And a lot of the time, emphasis on short-term profitability is the thing that leads to a lot of issues with regards to corporate governance, because the directors, their view is very short term, because they say, right, I'm gonna stay here for a short term and go out. So they will do whatever it takes to create the profit for the short term, but actually not look into the long term aspects of it, right? The UK regulatory framework, the UK Corporate Governance Code, what does it say? The main source of corporate governance in the UK at this time is the UK Corporate Governance Code, right? It is not a legal requirement. That's an important thing. However, the London Stock Exchange requires all listed companies to include their annual reports, a statement of compliance or non-compliance to the code. So it's not a legal requirement, but the stock exchange say it doesn't matter, there's no legal requirement, but you have to stay whether you're complying with it or not, so that the readers of this report gets a fair view whether you're compliant or not. Okay, so this has definite benefits to the stakeholders, right? So you can see what they are: encouraging all involved in a company to accept their legal obligations, right? Encouraging scrutiny of corporate stewardship, right? That means running the business. Imposing certain checks and controls in improving transparency, right? And reducing the risk. So these are the key aspects of UK corporate governance, right? Leadership, the role of the board, so all that is given. Let me check how much we have to finish. There's quite a bit. So what I'm going to do, I mean, as you can see, it is not very difficult reading, isn't it? Sahil? Right? It is not very difficult reading, right? So what the main components, I think, of the corporate governance where I needed to explain, I have explained to you guys, right? It is the rest of it, like, now you can understand how this whole thing works and the reasoning, right? So what I would like you to do is, again, to read through this when I send the questions, because you will understand it now in a better way when I give you the questions. Yeah. Kanika, anything from you? Right. So what I want is, very clearly, you have to go through each section and let me know the areas, and you have to mention, yeah, in this page I've read and I cannot understand this. So that ensures that you have gone through everything properly. Okay. Okay. Yeah, read your corporate governance, because I'm sending you the questions in a few minutes now, right? In the next half an hour I'm going to send you. I want you to read A, B and C, right? Yes, but I have already sent you questions for those. Yes, have a look at them, right? I think I have sent a lot of them, but do have a look. But what I wanted to do is read through the book as well and see, right? Because I need you to say, yeah, I don't understand this aspect. What they're saying, I do not understand. Kanika, are you clear on what you want? What we have to do? Yeah. All right. Yeah. Yes, I will do that right away. Yeah. You will have to